Hey, good morning, everybody. It is December 24th. Merry Christmas Eve to all of you. It's very early in the morning. Wanted to get this video out ahead of the market. Don't forget, it is just a half day today, and the market is closed tomorrow, as you know, for the holiday. A friendly reminder, little giveaway on X going on, so make sure you check that out. Gifting some unusual whale subscriptions to start off 2025. So I know why you're here. Let's drill into some of that GameStop option flow yesterday. Take a look at that though. 33 mil total premium yesterday with the net premium though, a nice one, 3 mil. So we had a net call premium of $3 million. Okay, you ask, where is the money? Where was it spent? Where did it happen? Let's take a look at that. We can see here about in the afternoon, right before lunch, started to see an increase in that net call premium, even though kind of stock price was staying the same. And we'll take a look at that here in a second as we drill into some of those options. But take a look at that here on the middle of your screen. Hottest contracts. These are the ones by top volume yesterday. Look, we saw those $125 calls again for January showing up, but then we saw these $60 calls for January 3rd showing up as well. We'll take a look at those. $40 calls for this week, 32s for this week, 35, 30, 31. A lot of the volume yesterday was for short dated calls for this week, which is scary because, like I said, today's a half day and Wednesday being closed, really chewing at that theta. But let's take a look at those 125 calls that we saw. I know you saw the post yesterday online, a lot of people posting about it. Let's take a look at that though and drill into some of that activity. We had about 1.7 mil yesterday in total premium on those calls. Now, there was 32,000 volume, you see here, 32,000 total volume. Again, bid volume 13,000, ask 17,000. It's a little bit more on the ask side than the bid, which is something we like to see. And then let's see, open interest carried over about 14,000. So let's see, about half the volume yesterday did appear in new open interest, and that's built to 130,000. So the idea here with these $125 calls, there's a couple ways to look at it. For example, you might own GameStop shares and you don't think the price will go that high. So you're just willing to sell some calls against your position, take a very high premium, and then hope that GameStop stays below 125 on expiry, which would be January 17th, and you would keep that premium received. For example, you may be also a call buyer that bought at 50 and then exited at 65 and took a profit. So we zoom out here for a few days on these 125s. We saw a lot of those come in like December 15th, 16th, and that's what really drove the price because they were being filled at 30 and then topped out over $100. A lot of people chased it up here towards the top at 92, so they might be a little bit down in that. So be very careful, especially with something that's 300% out of the money. So definitely something that we saw yesterday, but like I said, be careful with those. At the same time, you might be buying to open these calls. Somebody could be selling to open, which is just basically like selling a covered call. So for those betting on, the stock not to go above 125, they may be selling. Some just may be taking the 125 call because there's a lot of activity on that particular strike, so there's liquidity there. But also activity, as you see, based on the price of the actual contract the last few days, it gets spiked. So when there are moments of volume and volatility, let's see those contracts see 47 and then spike to 63. A little bit of a move there, 33, 30% move. So when you see that, so these traders could be betting on volatility and not so much for price to go to 125. They could be looking for just volatility on the share price. So that's just something to always keep in mind. But let's take a look at those 40s for this week as well that we saw come in. It was one of the top volumes yesterday. See 16,000 volume, now about 6,000 in new open interest. I'm looking down here in the bottom left. So let's see, 6,800 bid, 9,400. So a little bit more in that ask. Now those were alerted on unusual whales. Now that's a 30% out of the money call, short dated. So you'd want to be very careful there. Plus they were very cheap. I think they went from $15 up to $25, 26, and then back down to around 20 into the close. So something you want to be cautious of there, especially on a short dated call. Don't find yourself in a trap. And certainly if you see profit, take profit, especially on a short dated call. But I know you saw a lot of talk yesterday on those $60 calls because those did get alerted on unusual whales for volume greater than open interest because at the time this is a new option. So the first day of activity was just December 12th. So let me zoom out our unusual whales flow here. So you can see where those were at. See the price up there, about $100. and then they dipped down here to about 20 bucks, and then ran up yesterday with that activity to about 36, almost a double up in that regard. But it was a newer option. So these were $60 calls for January 3rd. Now we saw bid volume yesterday about 4,000. Ask volume was double that, about 9,000. But we saw the open interest. So of the volume yesterday, 13,762 plus 12,364 appeared. Now, granted, these traders could be betting on the same thing. These calls are 94% out of the money. So these traders could be betting on just volatility, an increase in price. They could be betting that they think GameStop could go that high. Am I saying that? No. You always just look at the option chain, the volume, and follow the price. Everything else is just a magic 8 ball. But you always want to be conscious, too, of those that might have been selling some of these. But like I said, the open interest has been increasing the last few days. So I assume someone's playing volatility. Because when the alert came through yesterday, these were filling at $26. And then they did get up to about 35 bucks. They're still kind of short dated with the January 3rd. But that was something that appeared. And, there was some premium there behind it. Total premium about 376,000. So that was something that I kind of saw those 60s. And the 125s kind of jumped out to me yesterday. The rest was more or less just short dated back and forth calls. Like you see, and I've talked about this many times where you see bid volume, and a little bit more on the ask, but you can see it's buying and selling all day. You buy here, you sell, you buy, you sell, especially with short dated. So just be very cautious. There was some changes there to open interest, and we'll pull up all of those open interest changes here in a second. But just a comparison here. Like I said, total premium yesterday about 33 mil, but some of that was net premium was positive. So if you want to take a look at that, the volatility is back up again. I know that makes a lot of people excited. But if we take a look here at the last week on the net call premium, we've got a day where we had, let's see, the 6 million on December 17th, and then it was kind of flat. Last Friday we did see about 1 mil, and then Monday we got up to about the 3 mil. So I think it was almost 3.5 yesterday. So a little bit more activity as price moved back closer to 30, and then that nice solid close above 30 yesterday. So it's definitely something exciting to see, something we've been talking about for the last few months on these videos. So I know that you've been paying attention because you're all very, very intelligent folks. So let's take a look again at those hottest contracts yesterday. Even though what we just looked at was by volume, I try to then sort it by premium, so that way we're able to see exactly kind of where that money was spent, where the top money was spent. So we're going to use this column right here. We'll look at the top premium was the 125 calls for January, which we discussed, 30 short dated for this week. It'd be very careful with those. They're in the money, but still very cautious. And then 30s for January, a little bit of open interest, plus 198. So we'll look at the OI changes here in a second as well. I just always try to look at like the top premium. Where was the bulk of that money? So you had 25s, these were in the money for January. OI, a little bit of increase with that volume, so could be some traders just winding down a little bit as we get closer to expiry. The 125 puts I've talked about, I've got an older video about that. That's basically just like $25 shares because these are in the money puts. So high delta, deep in the money. I'll try to find that video on my page where we talked about the 125 puts. So for example, if I wanted to, you could sell these 125 puts on the idea that they're in the money and your shares get called away. The reality is that there's a year till expiry. They have a high intrinsic value. So it's just something interesting. There was 3.2 mil premium. So you see about an equal bid and equal ask. So how that works is, for example, let's look at the price. Let's see, this price was $96.85 a contract. So we'll just call that $10,000 a contract, if you want to do it for simple math. So if I were to buy 100 shares of GameStop at $125 each, would be $12,500. So where that's the difference there is replicated is the high cost of the contract. So 100 shares at $125 is $12,500. But this 125 put represents also 100 shares for about 10,000. So less capital outlay in that regard. But if you do the math, it kind of derives back to like the $25 share. So I wouldn't focus so much on that. But if you do the math, or reply to this video to remind me about the 125 put I'll link that other video where I kind of talk about the math and break that down for you. So let's see here. What else do we see? 31. Like I said, a lot of the stuff's usually week in and week out short dated. $15 calls in the money. I like seeing that. Now let's see. That was for January 2026. There's someone buying nice deep in the money. So that's a similar concept of if I buy a deep in the money call, I will spend less money today, but still own kind of the concept of that many shares. So say I wanted, 1,000 shares of GameStop at $15 a share. Sure, that'd be great. We're gonna have to pay for that. But the reality is here to carry a deep in the money call like this, it's kind of like I wouldn't call it synthetic long position, but it kind of is a long position. So if I wanted to represent, let's see, in this candle, there were 400 contracts there traded. So 400 times 100, what do we got? 40,000 shares. So to buy 40,000 shares at market, I'm about, what, 1.2 mil? So less capital outlay. If you see candle premium was only 730,000, that represents the same amount of those 40,000 shares with just a less capital outlay of buying the physical shares right now. So that's kind of interesting too. Always like to see it in the money. I personally am a fan of in the money. I also will, like if I'm trying to exit a position, I'll sell a deep in the money call in hopes that I'm assigned and my shares get called away. And if you want to hear more about that, let me know about a deep in the money call and selling and why I did that, and possibly why it related to AMC. That may be a good educational piece. So let me know if you're interested in the deep in the money call option on AMC and why someone would sell one of those. Let me know down in the replies and we'll take a look at that as well. So let's take a look at the open interest updates here. I'll make sure there was nothing else that I saw. The 40s for January, I think we talked about those as well. A little bit of open interest increase, plus 879. Not a lot from the volume, but I like that net call premium increase. So we're going to jump back over here and go to the open interest explorer real quick, and we're going to take a look at our open interest, see what our largest changes, increases, and decreases to open interest, which is very exciting. So let me go ahead and take a look here. I was getting a sip of my coffee this morning. And let's take a look here. I'm going to zoom this in just for you. If you want to take a screenshot or pause it, you're welcome to do that. So let's see the largest increase. Make sure we're on today's date here. All right, so our largest increase to open interest, like we talked about, was the 125 calls for January, which are a big play on volatility. Those 60 calls we talked about in detail, again, playing on that volatility, but large increase in open interest. You can see previous open interest was only 1,800, and now it's 14,182. So pretty significant increase there. Definitely betting on the volatility. 40 calls for this week. 32. So I'll let you take a look here. Here's the open interest column, your increases. You're welcome to screenshot, pause the video, do what you need to do to take a look at it. Like the 60s were probably a lot of these, when these 60s came in for January 3rd, a lot more out of the money for a shorter dated expiry started coming through. Like 60s, it was trying to duplicate it. 60s for this week. So again, did volatility spike? Yes. Did these contracts increase in value from $3 to $6? Yes. But they're out of the money, short expiry. You're just almost burning money if you're not careful. So be careful out there, please. But those were your big changes there on the open interest. So you can take a look at those, and then we'll look at the decreases, because you've probably seen me post largest increases and decreases before. So make sure you get the decreases. The 41s look like those might have been wound down a little bit. Let's take a look what they did here. I'm going to zoom this back in for a second. That's what makes it nice with unusual whales, to follow this option flow. Once you get good at it, you can really start seeing where things are happening at. So let's see, what did we do yesterday? See, on the 41 calls for January, let's see, 431,000. See, look at now. Here's a good example where the volume yesterday was 2880. Most of it appears on the ask side due to the price. The price when it's filled is going to be relationship to the bid and the ask. So let's look at the actual fill on some of these here for these larger volume transactions. See, they were hitting filling on the ask side, 155, and it's coming through all bullish. Now these contracts could have easily traded hands, and the reason for that is even though we saw that ask volume, we saw a big decrease in open interest. So it appears bought, but a big decrease in open interest. So these contracts could have traded hands. Trader could have got a really good fill. That's very interesting. Usually don't see that. So in this, like I said, in this example, trader might have got a good fill, but the OI decreased. Trader might have also sold them to somebody else. I mean, like I said, it was part of a flow alert yesterday where these 41s were getting lit up. But let me see if there was any sold. So that's one thing you want to do is kind of zoom back out. Aha, see? That's why we zoom out. So, for example, if I had reported yesterday, which I know I saw the post, hey, they're loading $41 calls for January. It's bullish. That's what Wales said. You're right. But sometimes you got to drill back in. You got to look at all the data. You got to provide all the context. Otherwise, it's not accurate data. So if we go back here, where was that at? Let me pull that up here. Okay, so here we go. Back on December 5th. You see this large transaction here? Average fill 350. 1.3 mil. So this trader more than likely on December 5th sold a fleet of $41 calls at $350 a piece and happily bought them back at $155 yesterday. So that would be my guess as to exactly what happened. Note the size of these candles, very similar. So traders still could have some. Might have just closed their position, taken their money. Let's see how many were there. 37. Let me go to the actual day. 12.5. 37. So 3,500 appeared new open interest. 2,600 decrease. Trader could still be in these, just winding down the last few to expiry to squeeze out some of the money because there's still a little bit of time left on them. So, but yeah, so if you would have just saw that yesterday and followed someone on X like, hey, it's bullish. No, they were buying back what they sold. So that's an example where I sold to open calls and then bought to close calls. So even though it appears that way, it's always something to take a look at. And those were the $41 calls for January 17th. So again, always something to look at, especially when you look at these open interest changes. That's why I always harp on looking at those because they're updated once every day in the morning. So let's take a look at that chart with that impressive 30.90 close, right a few cents above that level we talked about, 30.87, which that derived from the high on December 5th. So nice close there. We were talking last week with this candle on the 16th was a bullish engulfing, and then we got the volume and the follow through and testing of previous highs. Back on the 17th, we tested 31.88. Yesterday, 31.11. So like I said, a close above that higher. So 32.12 or higher. That sets kind of like that gamma that is out there at the $35 and $40 level, as well as the $30 level that GameStop's currently trading at. So pay attention to some of your levels here. And then over to your left side today, let's take a look here. What do we got? You're looking in your top left corner of your screen. We got the 9-day EMA at 29.48. We got the 21-day EMA at 28.60, and that year-to-date volume-weighted average price at 27.33. So those are some of your levels for today. You're welcome to pause, screenshot. Been using these same levels since the summer when we talked about that year-to-date VWAP when we first tested that back in July. And that's where that originated from. That's going all the way back to January 1. We've discussed this in full. Year-to-date VWAPs will act like a magnet sometimes, especially when you stretch the timeline. And as you can see, price before used to serve as support, resistance, 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 and now has become support. So, and the book value for GameStop has increased due to their recent offerings as they're sitting on $4.6 billion in cash as of their last quarterly. So the other thing I wanted to look at as we wrap up for Christmas Eve, I'll give you time to watch this before the market opens. We'll take a look at that gamma as we talked about yesterday. As we talked about, as it got over the summer when the stock was 23, 22, 24, we talked about the gamma at 25 being strong and we saw it. Then we started talking about the gamma at the 30 and then we started seeing $30 level. So it's been kind of interesting to follow the stock in that regard. It's got a lot of positive sentiment behind it. So if we look here at the gamma, the largest there at the $30 strike like we talked about. Now we've built some more gamma here at 31, 32, 33, and again at 35. And friendly reminder there, just spot gamma exposure. You can pause or screenshot here. That's the assumed dollar value of gamma exposure market makers need to hedge per 1% change in the underlying stock. So positive value long gamma, negative value short gamma. And again, very increase in positive gamma. So if you watch yesterday's video, this was about 12 mil. So today a little bit larger and the exposure a little bit larger. So as price moves to 30 or moves above 30, more of those calls become in the money, and that requires additional hedging by the option dealer market makers that sold the shares. As they've now become in the money, they got shares tied to it, so they got to basically hedge against that upward movement. So we're going to take a look here at the gamma as well by strike by the let's see, yep, net gamma by the highest strike here at $30. And that's why I said above 30 and things started getting a little more interesting. Above 32 starts opening up the door at 33 and the 35 and $40 gamma levels that are starting to be built out there, with the big focus of net gamma on the January 17th expiry and this Friday. This Friday short dated, which is usually, you see that week in and week out with GameStop, where the highest will be usually the current week followed by the next monthly. In this case, January OPEX, which is the 17th there. So that's where it's at in that regard. So I mean, it sustained above 30, a test of 32, test of 33, brings more of those 31, 32, and $33 calls into the money, and that can get a little more expensive. Like your net delta is pretty strong here at 30. It's been strong at 20 and 25, but like I said, any movement above 30, 31, 32, it starts introducing the delta on these higher strikes. So in our largest delta exposure by expiry, again, January 17th. So a lot of things lining up with that January 17th. I'm not saying that's the date. I'm just saying that's the date in relationship to where the options are lining up in that regard. You know, what traders are betting on. Very short term in that regard, near term. So, like I said, that 3 mil net premium yesterday, not too bad. Make sure you're paying attention, you know, to what we talked about with the open interest changes. You know, where did those calls come from? Where is that volume coming from? Always important to look at. Another thing, always important to look at volume on your chart. I expected lower volume this week as it's a short week, a holiday week. So I'm not concerned about yesterday's low volume. What I like to see is a low volume and a higher close. I like that. A little bit of consolidation. Oh no. That was kind of weird, wasn't it? Kind of glitched out on us there. Some low volume consolidation. Might have to do a reboot there. It was interesting. No, don't bail on me. Don't bail on me now. Let's see, we get a little refresh here. I'm not sure what was happening there, but see, I'm always interested in like low volume consolidation. So we'll take a look at that. But yes, if you made it all the way through the video, you're awesome. Merry Christmas Eve to you. I hope you all have a wonderful holiday with your friends and family and loved ones. Short week this week. I'll be bopping in and out, making a ton of food today so I can feed my family tomorrow. And I'll be cooking a lot tomorrow. You know, the Christmas ham, all the goodies. I can't wait. I'm very excited about that. But yes, if you made it through the video today, you're a legend. Why don't you comment down below? Let's see. Comment down below, Wolf Christmas giveaway. And I'll know you watched today's video all the way through. You're a legend, all of you. Be careful out there. Manage your risk. Nobody can do it for you. I encourage you to spend the time with these videos. I think the education is important when it comes to options trading. And again, a very big Merry Christmas and Merry Christmas Eve to you all. We'll see you around the internet very soon.